Vincenzo's Gold Crypto Investing this May the 30th, 2025, noontime, daily cryptocurrency, blockchain technology, gold and silver, and the XRP video that you've come to expect, love, need, and deserve from the channel that is here and built and started for you, the retail trader. And it's very important to subscribe, hit that bell notification, yes, become members of Jabroni Killers for an industry cheap $3.99 a month that helps keep this channel and content coming and flowing daily and freely like it has been and always will be and will continue to be. And you'll notice now, Jabroni Killer members, they get a several hour head start on videos to where they can watch them and get the real first mover advantage. And then it goes out to the general public, a little perk, an extra perk to being a member of Jabroni Killers. And you can see with the Bitcoin price, we've been in this rising channel for quite some time here. You can see ever since we came off our mountain double top, then we came off our semi-short double bottom here off the critical $74,000 level right here, an area that we talked about for quite some time and an area that we forecasted it to hit. And then you can see our track in the background with our computer models that we selectively put a few on there just to show you some of the variances that you get. It showed it rising off of this critical support level, but it showed it, one of them actually had it even lower, one of them had it much higher, but it showed a general bounce in this area. And then you can see it showed it in an up and sideways consolidation. I thought it would top out right in here, but you can see it continued up all the way till now in a critical spot where you've hit resistance on the 24th, resistance on the May 9th, and resistance again on the 19th. And this is your first time you've really attempted to break down out of the channel, right? Got support, followed support. Now you're attempting to break down. And as you do know, and also the track starts to trade down to the 97,211 and 97 cents, this critical horizontal left to right major support level, initial support level, along with in this big initial rising channel, this whole move. This is the mean of the volume and the whole move that's chilling right here, right about where the 50-day moving average is going to be in a couple of days, and just above the rising 200-day moving average. So if this continues to break down and confirms down, this is where you would look to run into. Initially, maybe a slight bounce, don't want to buy you on the 50, but it would come quickly through that to the critical $97,211 and $97, and or just below that, the 200-day moving average on a breakdown. And then eventually, if this is a breakdown like we've been forecasting and talking about, even though it did breach and hit that new all-time high, a technical target would be a full lateral move all the way back down to the downside, something that nobody's really talking about, but something that I've continued to hone in and harp on, because I still believe there is a chance that this is still the pattern, the head and shoulders topping out reversal pattern, right? And the left shoulder, the head, and the right shoulder within a neckline down there at $58,000 and an eventual targeted move, which one of the tracks do show, which is kind of interesting. The one that is the most bearish is the one that's the most bullish going into 2027, right? But it does have a technical move down there, but you can see the variance, but you can see there is confluence that I believe we are coming back down to 74,000, even though we did make a new all-time high. I believe what this did here was very similar to what this did here, right? Where we formed a mountain double top. I think that's what we did. And the second part of the double top actually beat out the first one in this, and you can see it took from the first top to the second top, it took 211 days, right? And let's see how long this took. Looks to be very, very similar, right? From the top right here to the top right here, 123 days. So very, very similar, right? And then what you could say here is if this is a mountain double top or an M topping reversal pattern, you would go from the top of the two highs to the neckline of this, which would be just like the last one I just showed you, support, future support here. Get that straight. potential future breakdown. And look at that. That cuts you just through the neckline. And that would make sense if this is what's happening. And I think this is what's happening. It's still the same pattern, but it's a double topping out pattern to form the head. And if we do something like this, that's a classic double top, an M topping reversal pattern or a mountain double top, similar to exactly what you've seen there. And then you made your targeted move, and then you had your reversal, right? That started this epic part of this bull run. So that's what I think is going on here in the Bitcoin price. I'm going to continue to follow this in the Bitcoin price because it's very, 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 very important to see and to follow what's actually going on here. You can see the Bitcoin dominance continues to rally after it had that initial about a week's time where you actually had a fall, and that allowed a massive rally in the altcoins from their suppressed states. But since then, you've had the return rally, which has allowed the altcoins over the last day or two and three fall fast. You can see the Ethereum price after it continued to pump. The Ethereum price is still trading up and sideways. We are about to have, and I've officially had, a bullish cross now in the daily time frame. That's very bullish. And as we do know, it's been staying above this 200-day moving average in the daily, and it's been trending up with our upside target of $3,050.11. And Ethereum's really been, along with the Bitcoin and the major cap and the major traded coins, one of the bigger winners with the swing low from around 1383 all the way up to 2789. Obviously, if you have any kind of retest, you want to stay above this 50-day moving average, and that's still bullish on any kind of retest of the newly minted bullish cross in the daily time frame. Major support, if you did slip all that, is down there at 17.99. The XLM price is the same thing. You can see the XLM ever since we had this old grayscale blow off euphoric high with the Donald Trump rally, the track showed a down move and a sideways move till about where we're at now, and then we get a big divergence. That's how we were so confident, along with knowing the market, knowing the manipulation, knowing the technicals, and knowing the way the fluency of the market works. We knew that this was a regional top with the grayscale news that broke on a late Friday night that culminated with the euphoric 115 to 20% rally, almost a 1.5x move in about 3-hour time frame on a Friday night and early Saturday morning, and it had that blow off top, and we accumulated all of that, and that's what led us into telling you we were short to medium term bearish. We were giving you the first mover advantage. Nobody was talking about it. We laid out the groundwork, why and how and when it would break down. We told you there would be better buying opportunities, which there still is, from this euphoric blow off top if you never bought any crypto to begin with, when it was way down here in the 2-year bear market that we again laid out for you back in the COVID pump when we came out with this channel, looking out for you, the retail trader, to allow you to buy and accumulate during that 2-year bear market, to profit during the bull market of 2024 and the early 2025, and not to buy and not to misallocate capital after massive pumps and blow off bull markets, right? You have to accumulate in the bear markets, and that's what this channel tries to educate you on, to accumulate during the bear markets like we had in late 21, 22, and early 23 into late 23 before the blow off pump. When it's here, you already want to have everything you have, and you ride that pump. You take that profit. You reallocate money, right, after you 8x your return, right? You don't buy along the way. That's nonsensical. The buying should have been done. You don't buy up here. Once you got above this level, you ride it. And then when we get up here, we say better buying opportunities, and we lay you into the groundwork, because 63 cents, horrible buying opportunity when you had 2.5 years at 8 cents to about 18 cents, 28 cents, 20 cents, much better buying opportunity than 63 cents if you wanted to accumulate now that you finally had a substantial bull market. That is where you should have accumulated. That is where you should have reaccumulated, here and here after the big dump. Not up here at 63 cents. For one, it ruins your cost, your dollar. It ruins your average cost. It brings it way up when you're buying at 63 cents, when you were buying at, say, 13 cents, versus if you nip in here during that week time down here at 21 cents, to 26 cents. That is a much better and doesn't really bring up your cost per share or cost per coin as it does when you blow up and buy it up here, right? You gotta understand the market, and that's what we try to do for you here, and that's the education and information we give you. But you can see the track also gave us added confidence that the price was going to come down. It came all the way down to that 18-cent target. We had the bearish crosses. Now we've had the bullish crosses. The moving averages are running parallel. The 50, the 100, and the 200. The 100, the 50, and 200 from top to bottom. The short to longest term from north to south there. But you can see the tracks said the price was going to go down. All three of them there. And the price came down. Now about where you're getting into, we start having some divergence. You can see they all started to come back up here. But now you have big divergence here. One of them drives you all the way down to 14 cents over the next 6 weeks. Another one starts to take you all the way up to 79 cents over the next 6 weeks. And two of them run you up and down within a range between about the 20 cents and about the 38 cents. And then it starts to run up after that going into 2026. So there's a wide spread, the outliner to the upside, the outliner to the downside in the middle. I'm sort of blended in between. I still personally think we're coming to 18 cents. And I personally think we still probably are going to come down to the 14 cents. But that's still to be determined. But you can see the tracks have been doing very, very good here with the algorithm and the computer models and the information that are built into those. And you can see the price is running right in the middle of them right now. So we'll see what happens here now that we're below the 200-day moving average. If you don't get supported very, very quickly, you could flush very fast down to the 18 cents. The same thing with the XRP. The XRP is actually taking a very, very big move today. And you can see the XRP, this is another coin, old Vincenzo, giving you the information and the education that you need to make sound investing decisions, as just as when we were back here with the COVID, and I made this channel because I seen the fleecing, I seen the manipulation, I seen the orchestrated attack on the retail traders' emotions, that I had to start a channel to educate and look out and protect you, the retail trader, because everybody else was just selling you guys and using you for their own personal gains, right? And we seen, and the channel came out and we told you this was the blow off top, the Elon Musk and the Jeff Saturday Night Live. We told you and drew out this pattern. We had a technical target of all the way down at 18 to 24 cents. We actually wicked down below that. We wicked all the way down to about 27 cents. We told you there would be a depressing, debilitating, market shifting, multi-year bear market, which there was, and it started right here in April of 2021, and it ended, nobody knew it, but it ended in July of 2022, and then we started trading up from there, but really it officially broke, I would say, in July of 2023, but we had the multi-year bear market, and we were stressing and we took heat that people were saying you should never buy, but what we were saying is you don't buy the blow off top, the biggest pump since the original 17 and 18 pump that got XRP on the map. We were shouting out, this is where you accumulate the 2.5 years where you were sitting between, where you were sitting in a range after you had your local capitulation, which was right here, which was about a 55% flush in the matter of about 3 weeks. This was your time to buy for 2.5 years. From the 37 cents all the way up to about the 60 cent level was your time to accumulate for several years to make the move. Your time is not to buy or to accumulate during the move. That is when you enjoy the ride. You figure out what your move is on profit to downsize positions because you're 8, 7, 6, 5x up, 4x from what you bought it at. You have to take some profit, and then you watch the market and try to figure out what's going on. You do not buy the pump and look at the better buying opportunity you already would have got. You could have bought at $1.61, but you don't buy the pump, you buy the bear market, right? Now, you don't know where the bear market's going to start, but what we do know is you don't buy an 8x move, right? Because just 3 weeks, 2 months later, you had a swing high of 340 to a swing low of $1.61, right? And in an even quicker time, in a matter of 2-3 weeks, you had a swing high of 340 and a swing low of $1.80 that you could have bought if you had buy orders in. That's why you never buy the pump. You buy the consolidations and the bear markets. The bear markets are where you accumulate. The bear markets are where you add to your positions. And the bear markets are what makes you your fortune in the future, right? But what you can see here, and that's what we've been stressing, I still believe we're in this head and shoulders topping out reversal pattern, right? We haven't invalidated this pattern, even as the Bitcoin prices went up in yellow. And we drew that all the way back here, just as we were stressing and kept you out ahead of and gave you the first mover advantage on a bear market in 2021 that was coming. And then it laid out the 2.5 years to accumulate. We told you there'd be better buying opportunities right here, drew this head and shoulders pattern, right? Identified the neckline, identified a targeted move of $1.29, identified of a regional top, and 4.5 months later, you can see we've dipped down on a wick down to $1.61. We've taken out our underneath targets. Nobody else was talking about this. We let you know even here that the pattern wasn't invalidated. Even back here when we had that manipulated news that came out on a Sunday morning and the price went up 40% in an hour, that the bear market or the consolidation and the pattern of the topping out short to medium term was still in effect. When none of these other stations even knew the pattern, they thought it was over here and we were going to $6, $6, $6, $6. And nobody understood. Now we've come all the way back down. And like we were telling you, we're all the way back to just above the critical neckline support of $2.06, right? And we told you that would happen if you slipped the moving averages. And you slipped the moving averages. And that's exactly what's happening right now. We're coming to the neckline support or the 200-day moving average, which is just below the neckline support. And that's a critical area that it has to hold, which it's been trying to hold the whole time here, because if it doesn't hold it, it's going to flip it and confirm it as resistance. And that's going to be very, very bearish. And it would drive the price down in the XRP very quickly, all the way down to the $1.72 mark or $1.69 regional low that's there, right? And that technical target of $1.29 is still in play. This is a very critical weekend. This is a very critical thing that's setting up, as we identified correctly, that this $2.55 would be major upper resistance. The price at current price is down 18% from there. We're coming up to the major support level, and it must hold that major support level, or it's going to have a quick, swift, and just like we've been keeping you out ahead, coming straight down for a major retest of a regional double bottom of the wick low of a few weeks ago. Like the channel, it's very important to become members of Jabroni Killers and support us, as we are being threatened and manipulated and suppressed from getting our information out there, because we are there for the retail trader and we are not there for manipulators. Peace and love. The Rex Eyebrow, 71 degrees. J.